Welcome to episode 9. Today we're going to talk about how the blood in the market is destroying my portfolio. Hey everybody, this is Spooky's Revenge. Welcome back. This is episode 9 of the $500 5-year Rags to Riches series. And let's get my face out of the way so we can just dig into the portfolio. So I was being a little dramatic at the beginning. It's not actually bleeding out. We just have a little bit of red in the market, and that's nothing I really care about. But a lot of people would start to freak out if they saw a little bit of red, double-digit red. In this case, it's only about $25, and we're on a $1,271 portfolio. As you can see here, the S&P, Dow Jones, and Nasdaq were pretty red. We had a little bit of a choppy day in the market yesterday, but it's nothing we have to care about because we're on the higher time frames. So I don't mind a little bit of noise. As you can see, we have our biggest position here, Johnson & Johnson. It's a $300+ position because it's a $163.85 share. And so naturally, any movement in this is going to drag the portfolio around with it. And that's kind of the purpose of diversifying and using appropriate position sizes. So I'm pretty confident in Johnson & Johnson overall as a growth stock, but more importantly as a dividend stock because it's more stable and it's more reliable. So I'm okay holding this, and I don't really care about a 2 or 3% move. I can always average down. The lower this goes, the better discount I get. The dividends are still going to roll in, and there's still that long-term growth potential. So I really don't care about the noise. I was just being a little bit dramatic. So let's look at the dividend announcements that came out so far. So on October 2nd, JEPQ announced a 42-cent roughly per share supplementary dividend, ex-div on October 2nd. And what this means is that the company announced that they were going to pay a dividend. All right. Same thing for Tesla. TSLY, which is the ETF benchmarked on Tesla, announced a roughly 58-cent per share supplementary dividend. So both of these are saying the same thing, but one is for JEPQ, one is for Tesla. And in the case of JEPQ, I have 4 shares currently, but prior to this, I only had 2 shares, which means I'm only entitled to get 2 times this dividend, which is about 83 cents. And then this one will be announced soon. Tesla, I don't remember exactly how many I had prior to October 6th, or I guess I had all these prior to October 6th. So this, I will get 7 times this number here. So about $3.50, $3.40, or I'm sorry, $3.60, or somewhere around there. It's just 7 times this number. So that's cool. That's the best way to make that easy money, right? So let's go ahead and I'm going to open up an image here, and then we'll just walk through how the dividends work, right? Because that's one of the questions I seem to be getting a lot of lately. So I'd rather just clear it up. So there's confusion around the ex-div date and the record date and the payment date. So basically what we're at right now, the stage we're at, is the declaration date. Tesla and JEPQ are both monthly dividend stocks, which means they pay out every month. So they've announced the approval of their dividend, and they've given a specific number for that dividend. Okay, so that's where we're at. We don't necessarily participate in all this yet. We're not getting paid just yet, but it is pending in my account. So right now, we got the declaration. Next is the ex-dividend date, and that is the first trading day with the stock not having a dividend attached to it. So basically, that just is the date where the period rolls over, right? So they start the next non-dividend period, and then they'll announce the next one after that. The record date is the most important part. This is when you have to have the share. So typically it's after the ex-div date. Sometimes it's the same day, but usually it's the day after or 2 days after. The record date basically is just when the company makes a stamp in their book saying that you had this many shares on this day, and then you're entitled to that many dividend payouts for how many shares you have. So once they have the record date and once your name is in that book, then you get the payment when the payment date hits. Okay, so it goes in this order, and the easiest way to remember this is DERP, right? Declaration, ex-dividend, record date, payment, DERP, D-E-R-P, okay? So if you're ever confused or you can't remember which order they go in, just think of DERP, and you can remember me because I'm a DERP, and it'll work out for you. So let's go ahead and look at some of the account progress. Okay, so as you can see, we're up to 1271.97. Now that is with a 2450 net negative open position P&L. So, and that's because it's just a sum total of Johnson & Johnson, JEPQ, KLXE, Tesla, Schwab, and Clip. O is the only one that's positive right now, and it's just a little bit, right? We're just kind of pulling off this this little impulse. We're just pulling back a little bit. So it looks like we might have grabbed the bottom there, but we might also just get H-shaped continuation, and that's okay. Remember, because we're not trading the price action here necessarily, we're trading the dividends. So I'm okay with a lot of blood and a lot of red on these positions because that's what I want. Obviously, unless the company goes under, then it's a different conversation. Sorry about that. So far this month, I've traded SPY 3 times. It's currently October 6th. We have an open house in the Discord, so I probably won't trade today. But I've traded 3 times so far. I'm up at 1271, and I will probably look to buy some more dividends with that extra money. Remember, we started with 500, and then we went up to 1,000, and then an extra 200. Sorry about that. These are all single cut recordings. I don't really have a lot of time to edit, so I apologize. So on top of that, from the speculative trading, we've made $71.87 plus an additional $24.60 in open P&L. So altogether, we've realized about $97 or something like that. But the open P&L is kind of pulling back against that. So it's okay, right? So we're at that point where I've made about $100 roughly. So I can consider taking some of those excess profits and putting them into the passive income. So we're just going to refuel that machine over and over and over again. And this is where I am super proud of Snowflake, because he's no longer looking at his profits from speculative trades as dollars, but rather as shares of stocks that he wants to buy more of. So it's a pretty intelligent approach. I'm so sorry yet again. But he understands his role in the market, and he understands his role in his financial future. And that's something I'm super proud of him for, because he has, lost a tremendous amount of money on SPY, and then he clawed his way back out of that hole. Now he's net positive, and he's just turning into a little beast with Ford. He's just selling contracts and buying contracts and taking those profits and buying shares. So he's doing it the right way, and I'm proud of him. So his role in the market is the same as our role in the market. So when a company wants to go public, they sell parts of their company shares to the general public. The general public buys them for money, and then we can sell them back to the company at a later date for a net profit or a net loss. That's the basic low level of it. And that's where dividends come into play, because in order to entice people to buy and hold those shares and for that company to use that money, they offer dividends. Usually it's extra profits that they chop up and offer them to people like us. So all we're doing is just getting that allowance harvested over and over and over again and just holding the shares. So it's a win-win company for both us and the company. So once you realize that, you can go to multiple companies, and that's what we're doing. We're just looking at multiple companies, accepting that allowance and agreeing to hold their shares for them for at least a year or so. And then we're taking that extra money and reinvesting it the same way the company is. They're taking our money, reinvesting it, improving their stores, opening new locations, blah, 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 right? Similar to ETFs, they're offering shares of whatever benchmark in a traded fund, and then they are using that money to optimize their management and stuff like that. So a lot of cool stuff. It's pretty cool. It's one of those symbiotic relationships. So another question that I get is how the taxes on dividends work, because there are ordinary dividends and then there's qualified dividends. So understanding the difference between both of those is kind of important. And I will get a little bit more educational on these episodes, only because this is a relatively slow strategy. And once I take a loss on SPY for the month, I'm just going to end up not trading SPY anymore for the month. Then I have to wait till next month to trade SPX, which means I'll just be doing equity day trades on that 30% or 33%, I'm sorry, just over and over and over again. So typically, if you have a dividend, you collect a dividend, it's either going to be ordinary or qualified. And I can't give you tax advice here. So again, this is just general education. Always seek the assistance of a locally licensed tax professional for this. But if it is a ordinary dividend, that's just a non-qualified dividend. So basically anything that is a dividend, if it's not paid by a U.S. corporation and you haven't held it for more than 60 days within a specific period of time, that 60-day consecutive period has to occur within like a 4-month period. So if that doesn't apply, chances are it's an ordinary dividend and they're taxed at a higher rate. Whereas qualified dividends are typically taxed at a lower rate. Now, if you're trading inside of an IRA, Roth IRA, 401k, or a college savings plan, those are tax deferred accounts. So that means that the dividends are not typically taxed at that time. So And there's also, sorry, non-taxable dividends such as return of capital and stuff like that. So it's pretty cool. You just have to, it's worth a conversation with an accountant, with a CPA. Just reach out to them, ask some general questions. We're here to help you out with education. You got to have all the tools in your tool belt without necessarily having too many to walk around. And we'd rather have you guys focus your education on this stuff since it's passive and it should involve the most of your money, rather than, trying to figure out indicators and trying to, figure out when to buy and sell so much, because that is still a very good and very profitable part of trading. But until you figure that out, the risk is way too high to put all your money into that stuff. And you should always have some sort of stable passive growth. And you're making consistent contributions in the meantime. So that's really where financial success is at long term. And if you're not doing that, I would like to help you. And that's the purpose of this series. So I did take a look at my analytics for this series, and I'm super happy to see the turnout. You guys have just been overwhelmingly positive and consistent about showing up. So thank you very much. And I also noticed that 47.6 of you guys have subscribed, and that is insane. Normally it's like 3% or 0.2%, So I'm noticing that the watch time here for non-subscribers is around 50%. So if you guys want to keep seeing these episodes and you want to see them pop up in your notifications on YouTube and stuff, make sure you hit that subscribe. Sorry guys, I'm really congested today. Make sure you hit that subscribe button. There's also a notification bell. So that way, every time I post a video, you'll be able to see it. And then that way you don't have to try to find it in the Discord or manually look for this channel and all that good stuff. So I am going to have to end this stream here pretty soon. But I appreciate everyone for asking me all these questions. I got a couple that I got to go over for the next episode, but unfortunately I have to cut this short. I have to get ready for this open house that we have in the Discord. If you're not part of the Discord yet, if you go to Pennybois, PBAlerts.com, I'm sorry, there's a link to our Discord right there, or you can just go to discord.gg/Pennybois, and you can join our Discord, and we have an open house today. You can see everything that Premium has to offer. We are keeping the PBU, the education course, private for now, as well as the other stuff like the PB Advanced and stuff like that, just because we don't really want to see anyone get hurt or potentially try to consume all the education at once and then miss everything else that we have to offer. So for that reason, they're kind of locked down still, but you guys have plenty of time to enjoy the live streams. We're going to do a lot of live trading pretty much all day long. So if you've never been with us before, feel free to jump in, and I will end the pitch there. Otherwise, I hope everyone has a good day. And again, I'm sorry for all the coughing and and stuttering and all that, but I'm just not feeling good today. So I'm going to probably take it easy on the trades just because I identify that within myself. I don't feel like I can focus very well. And there's no point in trying to risk money because I don't want to cut my SPY trading short in the month on the 6th day. So I'm going to go ahead and take it easy in the market for now. And I will see you guys next episode. Thank you and bye.